Hello friends, this is another revision section and today our live session will be short. And, we will calculate the ratio only, and this is the question number 4, and hardly we will cover 3-4 questions because we don't have that much time. Okay, it's not showing properly. Okay. Okay, let's read question. You can see this is the questions and simple. This is company had sales in first year operation sales and second first year and second years has been given and first and second year salary given and what is the salary growth is mentioned. Uh, Salary you can see from for the 1 year 56 at 920 for sure salary and second year number 622310 second year means difference will be 53,000 divided by first year salary 68,920 right into 100 9.38 percentage. This will be the answer. And let's move for the another question. This is the next question and this is common size. It's also common size 1 year and 2 year second years uh, income statement has been given and this is washer sales washer sales second year sales has been given. Cost of goods 100% sales always we have to assume and so cost of goods sold selling and administrative expenses they are given and operating income what company estimate we should increase 5% year 2 right year 2 expected to increase 5 year with no price increase wherever no price will be the constant customer and no anticipated cost increase from his vendor cost also constant the same selling price and inventory expenses 5% variable and 95% only fixed and all of the prediction materialization. The company should expect selling and administrative expenses in year 2B. Now we have to calculate it. The selling and admin, expenses in year 2. Okay. Options given less than 40%, greater than 40%, but not more than 42% of sales, and 42% of sales, and greater than 42%, 40% or 42%. These are the options. And simple, we need to calculate the selling and admin expenses for the year 2, right? Simple. 5% sale will increase as compared to year 1, right? And out of that, selling admin expenses is 5% only variable, right? In this case, how can you calculate? Fixed will be constant, no need to change, calculate fix and cost. 40%, 100%. If suppose the 100%, assume 100%, suppose assume 100, and out of that 5% fixed. Suppose 5 is variable and 95% is fixed, and 5 is variable, right? And in this case 95% will be the same, and only 5% will change. 5% and 5% increase self, and then that will the variable, and 5% plus 5% will be 5.25, right? And the total cost will be the plus 95, 100.25 divided by 100, and it will be the greater than 40%, but not more than 42% of the sale. 42 more than. Now this is also lengthy question, and the selection from the information company here in select the balance is given. This is the balance sheet given. First year balance sheet is given, and what is the question is saying? Based on the above the information, common size balance sheet of the company shows property, plant, equipment. Property, plant, equipment. What is the percentage of property, plant, equipment? Now, property, plant, and equipment net, right, is showing that 2,250,000. 250,000 is property, plant, and equipment, right? You can see here. What is the percentage? We need to just calculate a percentage of this property, plant, equipment, and what is the percent exactly divided by 495,000, and it's come to 50% only. And in this case, the option A is the wrong, and option B, retained earning is 17%. 17 retained earning is already mentioned here. Retained earning showing that 60,000. There is a 60,000 retained earning divided by sales. We always compare with total asset means this is the compensation of the balance sheet is 95,000, and it's come to the 12%. 12%. This is retained earning 17%. This is also wrong. And option C is showing the account receivable 24%. Where is the account receivable? Now we need to find the account receivable. This is account payable, and this is the account receivable. Then account receivable, we have the 120,000, right? It's 120,000 divided by 495,000, and if we go and this come to the 24%. Account receivable 24%. Yes, this is a correct answer. Then we have to select this one. Okay. And now another question. This is another question. You can read here. Okay, this is a company has this is the question, and what is given here? Okay, it's quite difficult. It's not possible. Okay, okay, it's fine. I will show you one by one. What is the question is saying? The common size has, like, you can read. A common size income statement would show net income as, what is the net income, right? Net income, you can see here, this is the net income, right? This is total equity, revenue, cost of goods sale. And net income is showing how much? 40 lakh. Oh no, 40 lakh is correct. Okay. Net income is the 40 lakh, and this need to be calculated. Net income, this is managed revenue, cost of goods sold, net income, and total asset also given, total equity also given. In this case, we need to calculate net income on the basis of the revenue percentage, right? 40 lakh divided by, we have the 320 lakh. 320 lakh, how much will be there? Around into, it's come to the 12.5% only. And its option is J. And this was a very simple question. And this also seems simple questions. And what is the requirement of these questions? From the given, yeah, 2 years balance, 2 years data has been given here. Okay, and sales has been dropped. Sales has been reduced. It means, and your two as compared to year one, sales has been decreased. Year one uh, and one, and what is the your decrease? If year one is 100% and second year what? How much decrease? Okay, divided by 6 lakh divided by year one 698. It's come to 85. 86%. It's come to simple 86%. First option is correct answer. Simple. Now we are going to ask another questions, and this question is saying there is a data, this asset given, cash, account receivable, inventory, plant and equipment, assets, this liability, asset and liability, assets and liability as given here, and financial analyst reviewing the company's most recent financial year. What is the requirement of this person? Examine company relation with other firm in the industry, utilizing commonizing financial statement. Commercial financial appropriate cooperative value for the current asset is okay. Only current asset percentage is need to be calculated. Current asset means what? Cash. We have cash 150. Accrue account receivable 250 and inventory 200, right? Plant and equipment is not a cash, and we have the 800 total. 800 and current assets 800 divided by total assets. Total asset 2000. Simple 40%, and it's already answer is here given, right? This is the answer. No, this is the another question. Here is we have given the 4 years data. Gordon has the following financial result for the year 4 years, right? These are the 4 year data has been given, and sales, cost of goods sold, and gross profit, inflation factor also given, right? And the Gordon has analyzed the result using the particle common sizing analysis, right? Determine trend. trend. The performance Gordon can be best characterized by which of the following statement? There are four options given. Out of four, to increase. Okay, I think okay. I think this will work properly. And I'm not able to think. Option A. Let's go. And I think this is not working properly. I have to cut this one. Yeah. Okay.